Good morning this Tuesday, the 30th of January. I'm Grady Wolf, market analyst with Bell Direct. Wall Street rose back into record territory on Monday with the S&P 500 ending the day up 0.76% at a fresh record high as investors assess several tech giants' earnings reports and ahead of the Fed's interest rate decision announced tomorrow. The Dow Jones ended Monday's session up 0.6%. The tech-heavy Nasdaq advanced 1.12% as we head into the busiest week of earnings results for the February reporting season. Microsoft, Apple, Meta, Amazon and Google parent company Alphabet are all set to release results this week, which will likely spark movements for the Nasdaq, while Boeing and Merck will also release results and may spark movements on the Dow Jones. Ahead of the Fed's FOMC meeting, and it kicks off today on the 30th of January US time, traders are factoring in a 97% chance that the Fed will not cut rates for the January FOMC meeting. The current market sentiment is that in order to maintain the current rally on Wall Street, earnings need to meet expectations, the Fed needs to provide outlook and positive guidance on the rate front, and later this week US jobs numbers need to remain resilient but not too hot. Over in Europe, markets started the week mixed ahead of key earnings results being released in the region, as well as economic data and bank announcements released later this week. The Stoxx 600 rose 0.2%, led by oil and gas stocks rising 1%, while Germany's DAX fell 0.12%, the French CAC lifted 0.09%, and in the UK, the FTSE 100 ended the day mostly flat. Across the Asia markets on Monday, stocks closed mostly higher ahead of key fourth quarter GDP data out later this week out of Taiwan and Hong Kong, while Singapore's central bank left its policy unchanged as expected on Monday. Chinese authorities have also moved to make it more difficult for investors to short Chinese stocks, as China's stock markets have been among the worst performing in the world this year so far, amid the ongoing sluggish economic recovery in the region post-pandemic. Shares in embattled Chinese property developer Evergrande halted trading on Monday after Hong Kong's High Court ordered the liquidation of the company following the failure of an 11th-hour restructuring deal over the weekend. Locally on Monday, the ASX 200 rose for a sixth straight session and ended the day up 0.3% at the closing bell, led by the energy sector climbing 1.83% on rising tensions in the Red Sea, while technology stocks weighed on the market yesterday. Gold Road Resources tanked over 18% on Monday after the gold producer revealed its latest quarter production was lower quarter on quarter due to delays accessing higher grade ore from the company's open pit, on top of labour availability impacting the mining rate at the company's operations. On the commodities front this morning, oil is trading down 1.3% at $76.98 a barrel. Gold is up 0.65% at $2,031 an ounce, and iron ore is flat at $137.50 a tonne. One Aussie dollar is buying 66 US cents, 97.51 Japanese yen, 51.97 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open Tuesday's session up 0.5% ahead of December's retail sales data out later this morning. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained a buy rating on Gold Road Resources but has lowered the 12-month price target from $2.05 to $1.80 after the gold producer released a Q4 CY23 trading update, including production at its 50% owned Gruyere mine or gold mine had been impacted by labour availability issues and the issuance of lower guidance and production guidance for CY24 to allow for labour issues. And Trading Central has identified a bearish signal on Mader Group following the formation of a pattern over a period of 99 days, which is roughly the same amount of time the share price may fall from that close of $6.65 to the range of $4.20 to $4.60, according to standard principles of technical analysis. And that's all we have time for today. Have a terrific Tuesday, and as always, happy investing.